All right, what's up, everyone? For today's video, we're going to do a recap of the day trading strategy and go over how you guys can start to trade futures on prop firms such as Apex Trading, and there's many different ones, right? Now, I do have a link in the description to get you guys an Apex account and get you guys a nice little discount on that. But let's go over what it is that I'm looking at and how I like to trade the futures. Looking at the ES and also the SPY, right? We'll break down my strategy, take a look at ES specifically here, and then, we'll go over how we use them on both. I like to use the 1-minute chart for the SPY with some Heiken Ashen candlesticks. And I do post a lot of these trade setups that I'm watching and that I'm looking at in the Discord, right? And in the private trading group. You can see here where we're talking about a very nice base waiting for the breakout towards the end of the day. We've had really strong rallies lately. And then afterwards, we did end up getting that very strong breakout to the upside. So we'll break down all of that in today's video. It'll be a really good one and cover, the strategies that I like to use when it comes to day trading and specifically trading futures. As always, though, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I got a completely free newsletter for you guys called Investment Intelligence, giving out free, valuable finance and trading content. The last newsletter that I just published was on ticker symbol MATX, Matson. We're targeting 125, blew past that, all right, hit 129. So, if you want that free content, check out the website. There's a website associated with it. You can go back and read some of the previous newsletters. Many of those trade ideas have worked out really well. And if you want those directly to your inbox, you can sign up using that link in the description. All right. Don't forget, you can join the Investment Intelligence private trading group. All right. The link to join the Discord is in the description as well. And in there, you got 20 plus swing trade ideas every single week. There's custom scripts and indicators. So the scripts and indicators that we're going to be going over and using in today's video, those are available to all of the Discord members at no extra cost, right? There's also exclusive intel, exclusive chart layouts, different things like that. Really great stuff inside of there. It's a great value. Now, let's get into it here, all right? Let's go ahead and start off. So what we're going to do is actually start off here. Okay. Now I like to have one screen with the ES on it and one screen with SPY. All right. So I'm looking at, the S&P 500 futures, and then I'm looking at the S&P 500 ETF. And the reason I do this is because they are slightly different when it comes to some of the calculations, like the VWAP on SPY is not going to be the exact same as the VWAP on the futures. And then I also do like to trade options as well and day trade options. So I like looking at the SPY to be able to tell what the levels are, what option contracts I think that I should get. Now, there's some simple concepts, okay, that we'll go over, such as trading breakouts, right? Most people should be familiar with that, right? There's a breakout of this trend line here. Took a long entry on futures, riding it up here, had some very nice momentum. We saw a really big data spike, okay? Now, this is pre-market. Oftentimes I find that they are really clean and, just clean, right? Honestly, clean setups pre-market a lot of times, but you need to be very careful trading pre-market these days because there's so many inflation reports and so much inflation data that's, relevant now. Okay. A lot of this stuff, a few years ago didn't really move the market, but now oftentimes we'll see these, a data drop will come at 8:15 or 8:30, right? Or one at 9 a.m., 9:15 pre-market. And you'll see these big moves in the futures, right? You'll see a 10 point, 20 point, 30 point move sometimes in the futures before the market's even opened. And if you're not careful and you don't know when those data drops are coming, oftentimes you can get stopped out, especially trading with these prop firms where they have very strict rules about, a max drawdown or a trailing drawdown. If you're not ready for that, you can get your evaluation account blown, or you can get your PA account blown. And so, it is very good to always be mindful of the data. And what I do is I just hop inside the Discord. I type in /calendar. And what that does, there's a stock bot in there that pulls up lots of really useful stuff. And it'll go ahead and just tell me all the economic news and data that's coming out, for the day. And it'll give me the time slots of when that is. So that way I know, all right, hey, maybe I want to get out of this trade, right? So I knew that we had data coming in that morning. So I hopped in this trade and then I got out very early. But I got out at my profit goal up here, which was this gray zone. So trading trendline breakouts, that is one way to trade futures and to capitalize off of that. But that's not the main strategy I use. I really like to focus on the opening range. Okay, now what is that, you may say? Well, this is the futures right here, just the same chart blown up. And I like to look at a 15-minute time frame, a 5-minute, and a 1-minute. All right, now I mostly stay on like the 15-minute and 1-minute. But what I've done essentially, right, is I've created a script, an indicator for Thinkorswim that charts the opening range for me. All right, so you see this green dashed line right here and this red dashed line right here. This is the opening range low, and this is the opening range high. And you can find many different trade entries and exits just by trading these opening ranges, right? Typically you'll look to short at an opening range high with the stop loss shortly above, and typically you'll look to long at an opening range low with a stop loss shortly below. But there's other instances as well where you break out and retest those levels, and then if you break out, retest an opening range low, you can look for shorts. And just like we did over here, where we broke out, retested the opening range high, you can look for long entries here as well. So there's a few different ways to do it, and I think it's cleaner and easier to see. If we come in here and start looking at some of the smaller time frames and go over to our SPY chart. Okay, now the SPY chart that I want to show you guys is right over here. This is going to be on the 1-minute time frame. I do like to use this for the futures more specifically to help with entries and exits. And we'll go over what it is that I'm looking at here. All right, now these are Heiken Ashi candlesticks. Okay, these are not the same candlesticks as you see over here. And this is just something that I've implemented ever since I've started doing and messing around with futures now. And if we take a look, there's some really clean entries and exits based off of that opening range low and opening range high strategy, right? You buy the opening range low, you see when we dip down to that, you sell the opening range high. That's about a $1 move on the SPY. All right, remember the S&P 500 futures basically have a 10x multiple. So a $1 move on the SPY generally correlates to about a 10-point move on the futures. And if you're trading like prop firms, right? They generally want you to have a very tight risk to reward ratio, oftentimes a 3-to-1 or better. And so if you're able to capture 10-point moves on futures, well, that allows you to have about a 3-point stop loss, right? Or if you're looking to just capture a 6-point move on futures, you can have a 2-point stop loss, etc., right? And so you'll have there's plenty of juice to squeeze every single day based off the opening range trading strategy. And that's what I want to go over, is really just the opening range and how you guys can use this to your advantage. Okay. Now, I know lots of people tell you want to trade the breakouts, right? When you break the opening range high or you break the opening range low. But in my experience, it's much better just kind of, trying to make trades within the opening range, right? And whenever you see those breakouts and retests, that's when, you can look to trade the breakout, right? Is after there's a retest, is when you can have a little bit more confidence, a little bit more strength. I did take a long over here, okay, looking to trade this breakout, targeting the gap fill. But I talked all about that in the Discord right here, right? Basically, hey, we're setting up, we have a nice base here. If you're a fan of the channel, you guys know that we love these nice rounded bottoms right here. Okay, so this is just an intraday base forming right here, very strong base. We've tried to break out a few times, attempted it, but no real follow through from the bulls. And the more times you test this level, which is the opening range high, the weaker it's going to get, right? So the possibility of a breakout is even stronger. And then I pointed out, hey, we're looking to see if we can break this trend line here. All right. And so if we come back to our chart, that's right around over here, right? If I was to draw a trend line, that I drew on the futures chart, basically we're looking at something like this, right? And it's not going to show up exactly the same. This is a 1-minute Heiken Ashi chart right here, but everything about this trade entry I really liked, and it was a great trade. And I passed a prop firm in a single day, an evaluation account in a single day. Just trading these, right? And there's many times where I passed an evaluation account, in just a single day. It's not too hard if you know what you're doing. And the reason that I really like Apex is because you can have up to 20 accounts, and then you can start copy trading with those accounts. So you can take less risk, and be able to, just maximize your gains, your capital gains, by, instead of entering with 5 contracts on one account, you can enter with one contract on 5 different accounts. And so with these, prop firms and trading firms and things like that, it really helps out, because if you've only got, a 1,500 max drawdown or 6,000 max drawdown, then it makes a lot more sense not to be entering trades with 5 contracts, 10 contracts, 15 contracts, looking to make more when you can spread that out across more accounts. And if you do end up taking a loss for just a few points, on ES, that's only going to be about $100, $150, depending on if it's a 2 or 3 point stop loss you have. Versus if it's 10 contracts, that's a $1,500 loss, for instance, right? So I really liked what we had here, right? We were building that intraday base, looking to break out from this trend line. And we came here, we actually retested this orange line here, which is an anchored VWAP. So many people are very familiar with the traditional VWAP in purple that we have here, your volume weighted average price. The anchored VWAP is going to be one of the best indicators that you guys can add to your toolbook. Thinkorswim does not have it by default, but that is one of the custom scripts and indicators available to the Discord members. And so you can come in there and you can set an anchored VWAP and anchor it to a specific time. Now, the reason you do this is because institutions are on record confirming that they buy and sell at the VWAP, not just the intraday VWAP, but the weekly VWAP, the monthly VWAP, the year-to-date VWAP, a yearly VWAP, and many different, a quarterly VWAP, many different forms of a volume-weighted average price. Institutions, people like Citadel, Ken Griffin at Citadel is on record saying that he, fills orders at these volume-weighted average prices. So, really, really clean stuff here. All right, took this trade. This is the last trade of the day. Got out here, targeting the gap fill. There's what's known as gaps. So let's say, the market is at 5,000, right? And then the next day it gaps down, meaning that we open at 5,900. Well, now there's going to be a gap. These gaps are very tradable if you can recognize them and spot them, because 90% of the time gaps fill in the market. The big question, right, is when are these gaps going to fill? And these gaps are very nice if you know that there's a gap and you see that, sorry about that, and you see that we're approaching a gap. Oftentimes I'll look to try to capitalize off of that. So this right here, it shades in where the gap is. Okay, so it's another custom script or indicator available to the members, and it'll just automatically chart up a gap for you. These dotted lines right here, these are the previous day's opening range. So we talked about the opening range high, opening range low. We got the previous day opening range high, previous day opening range low. And then the solid body lines right here, the green one is the previous day's high of day. Okay, so the highest trading price we were at the previous day. And then the red one, which is not on this chart because it wasn't here, it was lower. The red solid line, that's going to be your previous day's low. So all of the lines that you're looking at on this chart, I didn't have to do any of them. All right. And that's what's so great, is that the opening range gives you opportunities every single day to trade. And you don't have to be an expert at charting to get these levels. Okay. And to make things even easier, I just created scripts and indicators that'll do all the hard work for you. So now you can come in, right? And if you take all of these indicators off, this is going to be a completely blank screen. Okay, but you throw on these indicators and now you have an opening range high, you have an opening range low, right? You have the previous day opening range, you have the previous day high, previous day low, and these are all going to be valid target areas for entries and exits, and they're given to you guys right away. So that's one of the things that I really like most about this. And then you can combine it with the cloud indicator that we've got here. And you use this cloud to give you confidence whether or not to stay in a play or whether or not to sell a play, right? And you can be a very strict rules-based trader. Like I took profit early here because I was looking to catch the rest of the gap fill, and we did end up filling the rest of that gap. So that's where my sell order was set. But if you look, we ended up continuing to ride those green waves here up into the previous day's opening range, and that's where we consolidated, formed a blow off top, and saw a very sharp sell-off And look at where we bounced when we sold off, guys. It's not a coincidence that we bounced at the opening range high, the VWAP, and the weekly VWAP, all right, the weekly anchored VWAP. Three solid bodies of confluence where we know that there are potential buyers at these areas. And if you took that trade, that right there was another really great trade. As you can see, we tagged the opening range high and then came back up again and tagged the previous day opening range low. So two really great trade entries right there. Using this strategy, I took about 6 trades that day, 5 or 6 trades, and was able to, get I think 4,250 to pass a 75K account with Apex. I do have different sizing on some of the positions. If I think it's a bigger move, sometimes I won't take as heavy of as a position. And if it's a smaller move where I think, hey, this one may not have as much juice to it, or, I'm only looking to get a few more points or a little bit less points, I'm not going to, size up as tremendously versus some of the trades I sized up a little bit heavier. It's not really all about trying to pass an account in one day or make as much money as you can in one day. It's really just about consistency. And after spending years trading options and just not having a consistent strategy, right? And oftentimes going back and forth between strategies, I found that, swing trading wasn't my favorite. I really like day trading because I wanted to know, I'm a little impatient, right? I want to know if I'm right or wrong that day. And I want to make my money or lose my money that day and reevaluate my mistakes. So for a long time, I didn't focus on swing trading anymore. It's what I did when I was a beginner. And when I got more advanced, I just focused on day trading. And it wasn't consistent, right? I mean, I'd have a good month and then I'd have a bad month and then I'd try a different strategy because, I have this strategy, I have this strategy, I have this strategy. And eventually one of my friends, who's in the Discord, he just told me like, he's like, man, just trade the opening range. And ever since then, I've really just been focused on that and it's really helped me and benefited me a lot. And I think it can benefit a lot of people too. And as I said, if you're someone who's, you're not too confident in your charting skills, right? Meaning drawing trend lines or drawing support and resistance, you can't ever tell, well, is this resistance or is this resistance? Is this support? Is this support? Using this strategy right here will really, really help you guys out a lot. And I think it's something that all you guys can benefit from by knowing what it is, what your plan is before the day even starts, right? So you're not waking up and being like, okay, well, if the futures are down, I'm bearish today, right? If futures are up, I'm bullish today, right? You're not really focused on if you're bullish or bearish. You're looking for, are we going to reject the opening range high? If we do, I'm going to look for a short. Are we going to bounce off of the opening range low? If we do, I'm going to look for support. Right. And oftentimes you can see these false breakouts, right? Both to the downside and to the upside. And what do I mean by that? Well, if we take a look here, right, we have a little bit of a blow off top, right? A false breakout here where we break out and then look at what we do. We come all the way back down, tag the opening range low. Here, right, we end up forming a topping pattern known as the double top, right? With the top here and the top here. I actually took this trade short here when we see that we have the double top forming. We're bouncing off of the VWAP here. But we come up and we reject in this Heiken Ashton candlestick. The reason I like these a lot is because it weeds out a lot of the noise. So I see that we have two black candles right here, which on a normal trader's thing would be green, and they're anticipating us to rally and break out past. But I see this red doji candle right here on the Heiken Ashton. This gives me the confidence, right, to really just take this short, put a stop loss shortly above, right, and look to ride this down to the opening range low. Another thing is that you can see here that our clouds flipped from green to red at this moment. So we've got red clouds, and I know that if we have red clouds below the VWAPs, that I can feel pretty confident in my trade. So, you take a risky entry here, knowing that we could get stopped out and we could break out back above the opening range high. We don't do that. We get the clouds to turn red, we get below our VWAPs, and we come down here, take profit at the opening range low. And over here, we formed a nice little base, right? And here I took a little bit more of a risk on entry, but it's a similar thought process, right? I'm knowing that, hey, well, we did come up, reject the opening range low. That would have been a really nice trade if you entered there and took out, and we're looking for a new low of day or just to target the low of day. That would have been a great trade. and I would have had nothing wrong with taking that trade, but I didn't make that one. And what I ended up seeing was, hey, it looks like the clouds and looks like the stock is trying to form a little bit of a bottom here. I know that if we can rebid the opening range low, that we can potentially come back up to the opening range high. So I jumped the gun, right? Putting an entry over here. Once we see this black candle here and we see the clouds flip green, now I have the confidence to try to ride this play, keep this momentum. And as long as we're trading in these clouds, right? You can see we come down, we're still in the cloud. So there's no reason to sell the play as long as you're still trading in the clouds, right? And we come up here, we hit our profit goal, take that, we come back down to the opening range low again, take our goal. I mean, if you look at how many times we bounce in between the opening range low, right? From the high to the low, from the high to the low, back to the high again, and back to the low. There's so many opportunities, guys. And you don't even have to trade this many times. You can really just take one good trade, two good trades, however much you want, and be done for the day. Oftentimes, I find that I'm done very early in the day, by 10 a.m., 10:30. Oftentimes, I say, hey, you know what, pretty much done. I got my one or two trades, capitalized on those. And then I'll come back after lunch. After the lunch hour, there's often really good opportunities because the EU, the European market, closes at 11:30 Eastern. And so then there's new setups, new potential setups here. And I'll go to look after lunchtime for some more trades. And then the last hour of the day, I typically don't try to trade that either. So, from about 7 to 10 a.m., I'm looking to make a couple trades, maybe a couple pre-market, a couple during market hours, then take a break, come back after lunch, maybe 12:30, 1 o'clock, 2 o'clock. And there's oftentimes really good trading opportunities there as well, after we have come out of that European market and after that European market is closed. So that pretty much wraps up today's video. Hopefully I did a good job explaining it, recapping some of the things. All right. If you enjoyed today's video, smash the like button, subscribe to the channel. I'm going to be doing a lot more trading recaps here in the future, just breaking down some of the day trades that I had, some of the day trades that we went over in the Discord, and then you can also sign up for Apex right now using my link in the description. That is the prop firm I'm using. Thinking about potentially using some other ones, maybe like Top Step or something like that. But for now, I'm just rolling with Apex. And I do like the fact that you can have up to 20 different accounts with them. So you start passing some of these eval accounts, and then you have a nice little collection of performance accounts. And again, you can get the copy trader, and start copy trading across all of these accounts. You don't have to trade as sizable, right? You don't have to trade as big in one account. You can make a smaller trade, but because it's spread across 5 or 10 accounts, with the same exact trade, it really gives you some really good opportunities. So that'll wrap up today's video. All right. Don't forget to sign up for the newsletter. All right. If you're interested in some free trade, swing trade ideas, free valuable finance and trading content, sign up for that. Check out the website. You can join the investment intelligence trading group. All right. And in there, you get all of these nice features, all of the scripts that were in today's video, exclusive chart layouts, unusual option activity, dark pool data, gamma levels, and much, much more is all available inside of the Discord.